Good afternoon, traders, and welcome back to today's daily analysis. For the dollar index, today reached a near 3 month high of 104.57 on Wednesday, driven by a strong U.S. economy, a hawkish Federal Reserve, and a positive growth forecast from the IMF. The Fed's Beige Book indicated slower inflation and the steady economic activity, fueling for further gains. However, the 14-day RSI is at 73.40, suggesting that the index is overbought and the upward momentum may be fading. The index could test the 200-day moving average at 103.81 soon. If it breaks, support levels may be at 103.45 and 103. Conversely, if the dollar remains strong, it may challenge 104.72 and 104.75 again. And then for the crude oil prices are under pressure, dropping back to $71. Traders are turning to the safe haven assets like the US dollar, causing bonds and stocks to decline. In Asia on Wednesday, the WTI crude oil remained in a bullish trend for the third day, staying near the 1 week high reached on Tuesday. This is due to the expectations of improved demand from China and ongoing political tensions in the Middle East. Investors are hopeful that China's recent stimulus measures will boost the fuel consumption in the world's largest crude oil importer. However, the US crude oil inventories increased more than expected last week, and the strengthening US dollar is making bulls hesitant to invest further, which is limiting oil price growth. According to the US Energy Information Administration, while the oil supply is adequate, the market is expected to remain oversupplied through 2024, making recovery challenging. For the crude oil to gain traction, it needs to reclaim the key 65-day moving average at 72.47. The significant resistance levels include 73.04 and 75.11. On the downside, the psychological level of 70 is crucial. A drop below this could lead to further declines towards 68.15 and $66.18. And lastly, for the gold prices, pulled back from the all-time high of 2,758.50 earlier this week, trading just below that level due to the rising US Treasury yields and a strong US dollar. Despite reaching a new high of 2,758.50 in Asia on Wednesday, the strength of the dollar and yields have been challenging for gold. The comments from San Francisco Fed President Mary Daly indicate a gradual path for the rate cuts, which also supports the US yields and weigh on the gold prices. Currently, the gold prices are likely to pull back to around $2,715. A sustained drop below this level could threaten the psychological support of 2,700, with the last defense for buyers at 2,671.20, the 14-day moving average. The RSI is easing from the overbought levels, suggesting potential for a pullback, but keeping buyers hopeful. For gold to regain the upward momentum, it needs to surpass the recent high of 2,715. 51.20 with resistance expected at 2,765 and $2,790. And that is all for today's daily analysis. Thank you for watching.